Emerging markets are getting destroyed right now. All throughout 2018, we have seen emerging market currencies declining and the contagion is spreading. You came here for the truth, so let me unveil that for you. Today we're going to look at emerging markets. I have several charts to show you, a lot to get through. This is going to be as quick as possible. I'm going to show you this chart first, looking at the current pace of GDP growth. The probability of negative returns is reasonably low. And this chart is basically showing us that the most chance that we have right now of growth is going to be in the range of about 0%. And that's what it's showing you here. That does seem about right. We have exhausted the amount of growth that can possibly come from all of the stimulus, whether that's from the central banks or the governments. And ultimately what they're trying to do is engage in deficit spending in order to get this going. But there's only so much. The more money that's printed, the less effect those dollars have, and that's what they're finding right now. All right, so I'm going to show you some more charts right here. Looking at this, valuation is the most stretched of the bull bear categories, and you can see that this on the left hand side, it shows us the Schiller PE, unemployment, ISM, term structure of the euro yield curve, and core inflation. All together, that makes up the Goldman Sachs bear market risk indicator of 75%. And that's just one indicator, but it is showing us here that we are definitely overvalued and overdue for some sort of correction. Looking at this here, a high reading on our bull bear indicator typically implies a bear market or period of low returns over the following 5 years. All right, and that's basically the same sort of situation but in a graphical form, and you could see that for yourself right here. Let me move on. Looking at this, it's basically showing the same scenario in another chart form, also adding to that the bear markets, of course. So we are beyond the territory that we saw in 2000, beyond 2007, 2008, and now today we are here at 75%. So this is just one way to look at it, but it puts together a whole bunch of pieces, and ultimately what we can see is that we have encountered a territory of extreme risk, of high volatility despite what we are seeing with the VIX index, and that has to come to an end at some point. It will definitely take a while, there's no doubt about that, but emerging markets are the ones that are really suffering today. The G4 plus Swiss central bank asset growth year over year, now we're down to less than 5% growth. This should be a concern for anybody because you can see the weakness here in these economies, in these markets, and it has all been allowed to get this far simply because of central bank intervention. There had been several central banks that had come out and suggested to the US, please do not decrease the amount of money that you print. It's going to hurt us. And it has. It absolutely has. So that's what we're seeing today, that decline in the amount that central banks are printing. Now, that doesn't mean that they don't have massive trillions and trillions of dollars worth on their balance sheets. They absolutely do. This is talking about the growth. And we need consistent and increased growth year over year in order to support this dying system. Take a look at this. MSCI, emerging market equity, is down, and according to this chart here, it's showing us that it's down 20% in 2018. Doesn't surprise me. I actually thought it was worse than this, but according to this one chart anyway, and this will only get worse as time goes on. Okay, that's generally the way it goes, especially when we have that decrease in the amount of money that's being put out there by the central banks. This year's rout is the longest since the financial crisis. Can you believe it? Looking at this, at the same time we see all of the US, like the FANG stocks, for example, just hitting new highs, the S&P hitting new highs, but yet we have turmoil that is going on all around the world. This chart here basically showing the black line is stocks, then we have currencies and foreign currency bonds. Whether you're looking at the previous issues that we've had before, whether it's involving China, the taper tantrum, and so on, you could see the 2018 sell-off right there has affected markets globally and has been quite bad, in fact, for emerging markets as a whole. I mean, we're looking at China's being down 24%, emerging markets as a whole down 20%. Global systemically important banks are in a bear market as well. Looking at all various countries and their currencies are down into bear market territory. It's not really looking good. That's for sure. Now, the Jakarta Composite Index, I had showed you Indonesia, I mean, I showed you South Africa, I showed you all kinds of countries that have been suffering recently, whether it's their stock market, whether it's their currency, and so on. But here you can see the Jakarta Composite. Now, it's breaking this down over the past couple months here. It's more of a short-term chart, but I wanted to show it to you because I've been tracking all of these economies, showing you the stock market, the currencies, and so on. And that's another one that is basically free falling here in the last few weeks. MSCI Emerging Currency Index and the MSCI Emerging Markets Index, both of these have been declining all throughout 2018, and it's good to see them together on the same line here, and we could see where they have gone clearly, very, very clearly, that they have been declining here over this period of time. Looking at this, South Africa's currency has been devalued quite significantly, and this chart goes back several years, in fact. However, we're at a point that we have not been since it looks like 2016 or so. So the decrease in the value of this currency has truly not good in terms of where we can see the prospects. It doesn't seem to be turning around anytime soon, and will probably continue to decline as long as all the other ones out there are doing the same thing. Then you can see this chart here out of Bloomberg. I like to show this regularly. The best spot returns and the worst going down right here, just showing us that the South African rand had declined even more. Mexican peso finally has come down. I mean, it was in the positive territory for the year, but now things have been changing just recently right here, just showing you this and other currencies as well. But this is a very, very short term, obviously, so we're not going to be able to see the bigger picture in this chart, but I want to bring that and update you as it goes on. Okay, so that's all for this video. I could show you this right here. I had one more just to give you a breakdown. I mean, you can see the sea of red. No matter where you look around the world, it has been quite, a big amount of turmoil at this time, and you can see the different stock markets that have been declining as a result of everything that's been going on. There's so much. It's not just about emerging market, but clearly there is some definite weakness. So that's all for this video. If you found it informative, please give me a thumbs up. I'm trying to bring you quick, concise videos. I hope that this was one of those for you. If you found it informative, hit that thumbs up. Hit that thumbs up. It really supports me. Definitely appreciate it. And obviously, you need to subscribe. Any moment now, we're going to be crossing that 140,000 subscriber mark, and you want to join the rest of the people, this most global program in the world, where we will go beyond the 150,000 subscribers this year. I'm just really happy that this channel has been growing, and I'm so appreciative of all of you. So hello to all the subscribers out there, and I'll see you on the next video.